Shut up and sit down.
Alright everybody, welcome back to Rebel Trading Group, episode 54. What is up everybody? Today's date is December 17th, 2018. It's Monday everybody, how are we doing? My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessing. I forgot what we used to call you.
The gluten-free Jason Bessing is what I've always been known as, always.
It doesn't change, all the time.
How you doing, brother? Happy Monday. It's Monday yet.
It's Monday morning.
Is it Friday yet? Ugh. Well, we've had a moving market today. Moving market. We've been kind of just up and down, up and down. We're still down, but we're trending to the upside.
Trending
Dow
up.
Jones is still down 62 points. S&P only down about 5 points. NASDAQ down 3 points. Oil still sliding below the 50 mark. We're at $49.90 a barrel. And then we have gold holding strong at the $12.46 mark. Let's pop on over to the cryptos, who are having a day, finally, with 626% up on Bitcoin, bringing us to 3,413. And I just want to let you know that the current winner today is Bitcoin Cash and Litecoin. Those are your current winners so far. Bitcoin Cash is up 9% today. Do you know what her price is? Do you want to know?
Yeah. Sure.
$87.
Bitcoin Cash?
Bitcoin Cash.
That's hilarious.
Do you remember when it was like 800, 900?
Yeah, it was like 1,300 at one point.
It was like 400 when it was getting really sloshed. Litecoin's at 28. Ethereum Classic at $3.88. It's just kind of funny to see what's getting phased out. But finally having a day in the spotlight. Will it continue? Probably not. Unless there's some interesting news on it. So with that being said, because I said the word of the day, let's pop on over to Market News with Nathan Oliphant.
All right, I don't really got much news. Big news coming out of Google, though. They're on Capitol Hill. There's a funny video going around, like that the congressmen or the representatives roasting him didn't really know what the internet was. It's kind of funny.
Same thing with us. We had that with them, right? When they were like,
anytime a company is getting roasted by the Hill is kind of a big deal for the company, and I haven't been paying attention to Google shares though, so I don't know.
Imagine there's some volatility there. Let me see if I can pull her up while we're going.
They've been down. They've been going down the past week. It's been like a steady down. It hasn't been too much sharpness, but there was a big drop. The 17th. What was that today? This morning. But we're going back up apparently. So
strong down. Sorry to interrupt, but strong downtrend during the week, but really only down 1%. But there was a pop up, and then there's been a strong downtrend since then. But not horrible. Not getting sloshed.
But any time that happens, you gotta wait for the post.
Yeah, you want to wait till the anxiety is over.
And if they rule on it and then make legislation that affects them, that's when we kind of sell everything.
Yeah.
Sell all your Google.
Are you about Google?
Over 5 to 10 years, yeah.
I'm about the company. I'm not about the stock. It just scares me. It's too big. It's too volatile. They got their hands in a lot of pots. They might get breaking up one day. Broken up. So, anyway, anything else going on? I feel like nothing happened really since Friday, right?
Yeah, not much. Johnson & Johnson.
Oh yeah, we did talk about that. What are they doing? What are these guys up to?
Johnson & Johnson.
Are they recovering from that, or?
Well, they're with the Dow, so I assume they're up, but they
down 3% today.
There we go.
10% on the month.
There we go.
11.5% on the week.
Down 7% on the year.
I think they have the potential to go a little bit further as these court hearings go out, unless some sort of settlement has occurred or whatever.
Just give the whole fucking year back. God damn. That's
Everybody did.
Should we check the Trump Twitters?
The what?
Trump Twitters.
Trump tweets? Do we have anything?
Anytime you hear a Democrat saying that you can have good border security without a wall, write them off as just another politician following the party line. Time for us to save billions of dollars a year and have, at the same time, far greater safety and control. You know what? You should probably invest in Caterpillar.
If that wall goes through.
Mm-hmm. Donald Trump is going to have his wall.
You think so?
Yeah.
Think he's going to pay for it himself?
How much
GM
is it gonna
General
cost?
Motors is going to pay for it. They're going to stop paying the dividend and stop paying for the wall. I talked with him. It was a great talk. We all had a great time. I had the salmon. It was wonderful. Absolutely wonderful. And it was a
Where do you
great
think?
luncheon.
Hey, where do you think trade talks are going to go with Trump and China?
Both those guys want what's best for their country. That being said, they both understand that they need each other. They need what each other has to offer. Unless China is just going to have some complete change about their labor laws and their import laws and stuff overall, then they're going to be dependent on our consumption versus their production. Therefore, we want what's best for both. But I think China doesn't want to be kicked around anymore. I think they want to make a little bit more money. That's it. That's what it's all about. It's just about the money. That being said, if a good one is reached and it's finally all said and done, I think it'll be a positive impact, not only because of the trade talk itself, whatever the terms and conditions of it are, but also because it's finally over. We don't have to listen to it. We don't have to worry about it. The papers were signed. It's over. That's not a fear in the marketplace anymore. That variable will be removed, and I think that's what more investors are looking for.
Okay, cool. I like that answer.
Cool story, bro.
No, I do. I like that answer. I agree.
All right.
Yeah, I think we have like a symbiotic relationship. You know what I mean?
Yeah.
Like exactly what you said. That's it for news, man. So pay attention. Trump tariffs, tweets, TTTs. Stay tuned. Autos should be going up, right?
They're getting hit by the interest rate fears.
Oh, that happens this week. That's more news.
Yeah.
Federal Reserve is supposed to hike rates.
Supposed to. I don't think that they're gonna. I think they might
What if they
pause.
don't?
I think they're gonna pause.
What if they don't? Oh. Buy calls.
Didn't they say that they're near neutral anyway?
Yeah, dovish is what they called it.
Yeah, dovish. It's near neutral.
But have you seen those articles? The Fed chairman can do whatever they want.
Yeah.
So I mean,
and to be honest, they'd probably rather have it too tight than not tight enough. Because if it's too tight, they can just wind it back just a little bit to fix it. But if it's not tight enough, they've got to get aggressive fast, and that causes huge shocks to everything.
Aggressive fast.
Got to get aggressive fast, like the end of sex.
All right, let's go on to our market terminology.
All right, market terminology. We discussed about this. We picked it out today. And we're going to talk about inverse ETFs.
Bam, bam, bam.
Nathan, can you tell me what an inverse ETF is?
So of course it's an ETF, an exchange traded fund. It'll perform inversely to whatever the underlying asset is. And a lot of times it'll be I've seen single inverse funds, double inverse funds, triple inverse funds. For example, for the Dow Jones, UDOW is the triple leverage fund, and SDOW is the inverse triple leverage fund. And that'll perform negative three times whatever the Dow Jones does. It tries to, at least. That's what it says.
Okay, so give me an example. Let's say I buy the Dow Jones. I like DIA, and you say, no, I don't like DIA, and you want to do the exact opposite of me. So I would buy DIA, and you would buy, I think
I
it's
don't know
called
what it is.
DOG, D-O-G, if I'm not mistaken.
Let me see. Short Dow 30 ETF, DOG.
So that's the single one. So let's stick with that one for now. So that means, hey, I think it's going to go up 1% this week. And you say, no, I think it's going to go down 1%. So you would buy the inverse ETF because as the Dow Jones goes down, the inverse ETF will go up. And as the Dow Jones goes up, the inverse ETF will go down. So it's supposed to just mirror whatever underlying asset or index, whatever the performance is. And then, of course, you have your leveraged and leveraged inverse. And it gets messy when you start trading with those options. But that's besides the point.
Do you like know what they hold?
Yeah, they hold swaps. They hold so it's futures contracts is what drives the price of the underlier. Is all derived off of tools and agreements and bets between banks, all very complicated tools. The inverse will literally just short the ETF. But the leveraged inverses and the leveraged funds hold the swaps and short the fund. So it's a little bit better to use the inverse because you don't mess with the leverage and you also don't have the time decay and the fees of the swaps working against you.
Right.
But these products are great for something like an IRA because in a 401k, you cannot short the market. You also can't do it in an IRA, but you can buy an inverse fund. So if you expect the S&P 500 to go down, maybe you buy SH, which is the single inverse ETF of the S&P 500. And as SPY drops, SH will go up.
Hedge it, baby.
And hedge it, baby. They are great for hedges. I was going to say that too. I've heard of some investors use maybe 3 to 5, sometimes 7% of their portfolio, and they keep it in an inverse ETF at all times. That way, if the market just takes an absolute shit, they got something that appreciated. Something. Yeah. So it's a good hedge to have as well. And my other final point on it, an interesting one, it's a good way to practice shorting. Because if you short a stock, remember you borrow it and you buy it back at a lower price. In the long run, an inverse ETF will always just go down and down and down and down and down, right? As the market goes up and up and up and up. But there will be times of high and fast spikes up. And if you play these properly, these inverse ETFs will help you short. So you could short SH at 28, and as the S&P goes up, maybe you buy it back at 27.50. It's a good way to practice shorting because the thing is designed to go down. I've never done that, but if
never hedged before like that?
Well, I've never shorted an inverse ETF.
Oh, I have. I bought a put on SDAO once.
It's like buying a call on UDAO. But it's a little cheaper because of the pricing.
It's a little bit cheaper.
Because of the pricing. So you can get more contracts.
There's less value in the SDAO contracts than the UDAO contracts.
So do you mess with inverse ETFs or do you just short the regulars?
So I bought a triple leverage. Yeah.
SDAO?
I bought, I think it was like 2 triple leverage and a single inverse triple leverage. Or it was like I bought a triple leverage and then one single inverse leverage. You know what I mean?
Mm-hmm.
And so that way, if like it went down, like I still like made a little bit of money, hedged against the triple leverage.
Yeah, I get that. Yeah. I don't really mess with them. I don't touch them. I'm not an ETF guy. I like single stocks. Shing stocks. So, that's Inverse Funds. If you have any questions, comments, concerns, suggestions, insults, corrections, ideas, email us, Rebel Trading Group with 2Gs at gmail.com. Nathan, let's continue on with this sector series.
Oh!
So we've talked real estate, we've talked consumer discretionary, we've talked healthcare, we've talked energy, utilities, consumer staples, financials,
Industrials.
And today, I want to talk technology. Communications we've done as well.
Yeah, come.
Which is a new one since we've started this series. And it's funny that we do technology and then I bring that up. I wouldn't say funny. That's probably a bad way to put it. However, we're going to talk technology. The symbol or the underlying sector ETF that most tracks this S&P 500 sector is XLK. K as in Krypton, kryptonite. Or Kyle.
Boom, there it is.
So, XLK uniquely was changed in the past several months, and that was because the creation of the communication sector. So XLK held stocks like Facebook, Google,
yes.
A few other ones, Twitter, Sprint, stuff like that. Those were held in the XLK and are now moved over to the communication sector.
XLC.
So XLK, give me some of the top holdings right off the bat.
All right, the top holding is Microsoft, which is, I think it's the biggest market cap right now.
Yeah, that's why it's the top holding. It adjusts as the market adjusts.
And number 2 is Apple.
Mm-hmm.
And 3 is Visa.
Visa, strong player.
Intel's coming up, Cisco, MasterCard, Oracle Corp, Adobe, Broadcom, IBM, Salesforce, PayPal, NVIDIA, Qualcomm,
a lot of big
HP.
Names.
Yeah.
A lot of big names. A lot of big household names, too. Or
Texas Instruments.
A lot of names that we use every single day, especially the Apple, Microsoft. NVIDIA, more people don't know that NVIDIA runs a lot of the appliances in their house. A lot of the things and chips.
Teslas
of the world. Tesla's in there?
No, NVIDIA.
Is Tesla in discretionary?
No. Tesla uses NVIDIA chips, right?
Yeah, they do. That's correct.
That's what I was saying.
But where is Tesla? Have we...
I can look her up real quick.
What sector is she in? Because now that we've done this, I imagine she might be a small holding in XLK. Would you say that she's a tech stock?
No. Hell no.
So where are the automotives? Industrials?
I don't know. Is it like Dow Jones Transportation? Is that what it is?
I don't know.
I'm not sure, man. I'm just dumb. Industry, auto manufacturer, sector, consumer cyclical.
So discretionary, I guess?
Consumer cyclical.
Okay.
That's what it says.
So I guess that's discretionary. Anyway, that's besides the point. So XLK, very, very aggressive sector. I want to start with your thoughts on it. Give me what you like, what you don't like.
Okay, I like it because like it kind of it's tech, baby. It's like it's like what the fucking generation we're in. We're like past like the Bronze Era and the fucking Gold Era and the fucking Stone Age. We're past all that shit. We're in the fucking Tech Age.
The Space Age, they call it.
Yeah, we're getting fucking... This is the ETF that's gonna like take you to the moon.
Okay.
Okay.
Anything else?
What do you got for me?
I like it now that it doesn't have Google, it doesn't have Facebook, it never had Amazon. But I'd like that it doesn't have those high flyer Netflix, those kinds of names, because before they were in there. And now I would love to have exposure to both Apple, Microsoft. And I think this is the best way to capture that. And as far as something as a 10-plus year hold, I think that this will just about double in 10 years. And you do get a little bit of a dividend because Microsoft and Apple pay a good dividend. So does Qualcomm, Broadcom, all the other ones in there. So I like that some of those now communication stocks are no longer in there because that helps with the valuation of this ETF. Before, I thought it might be just a little bit too aggressive because it had the Google and Facebook in there, and I'm just not a huge fan of those. TBH.
XOK, I think XOK's got the innovators in it.
It does. It has, or at least has the ones that want to stay relevant. Like IBM's still kicking. They're not doing so hot, but they're kicking, dude. They're still around. They're doing stuff. They bought that other company, Red Hat. They're getting more into business solutions.
And they're getting more into cloud solutions as well. Cloud-based data solutions.
Microsoft's dealing with blockchain and cryptos a little bit.
I think if you can advance in those, like crypto and the cloud right now, I think those are going to be the next two things to look out for. And I think, where else are you going to find that in an ETF?
That's true. Or especially, I like the security of a blue chip doing the innovation in that. I don't like startup blockchain companies, but I like Microsoft buying them. I'd like to have a piece of it under that umbrella. Still gives you some exposure to it. So I think XLK is going to grow aggressively.
Yeah.
Especially as our lives get more data dependent, more electronically based.
Technology.
Like, dude, 10 years ago, high school, when we were sitting in economics class, what if I was like, dude, we're going to have a podcast one day and we're just going to record it, and then maybe later I might call a car from my phone to have it come pick me up and take me to the bar. Like,
I would say, honestly, bro, yeah, I could see it.
But, like, we've come so far in 10 years. So imagine what companies will take us in the next 10 years. We were in high school when the first iPhones came out. You remember how crazy that shit was? And now look where it is. Like, what can't you do without it? Like, it's so integrated into our lives. People are tracking their health with it. People are tracking their finances with it.
People are tracking their dogs with it.
People are tracking their dogs with it. Taking pictures and selfies, Instagram. You can do entire podcasts straight from an iPhone. There's amazing things you can do. You almost don't even need a computer anymore. Those are going to fade out. Everything's just going to be on one handheld device. Everything you need. One Siri. Nothing else but a Siri.
Could you imagine trying to type on it? I guess you would have to like speak VSA.
Yeah, everything might just be like sending each other your voices. And then eventually that'll like transcend into sending your thoughts. Joe Rogan once said that there's going to be some developed humans 65,000 years from now. They're like, can you imagine actually having to talk to people? Like, these guys actually had to talk, like form words from their mouth.
J-Nug having a day. Holy shit, sorry. 8.4%.
Gold doing I, huh?
I sold that call way too early. That's all right.
So, I like XLK. I think it's a good aggressive grower. I think it's also maybe even a good trading vehicle. If you're into that kind of stuff. I really don't have much bad things to say about it, to be honest. I like Microsoft. I like Apple. I would wait. I think currently at these prices, it's not a good time to get it. But on a strong dip, I could allocate 5 to 10% of my retirement portfolio to this, no problem, and not even lose any sleep over it.
Probably pick it up now on this dip right here at 13.35% in 3 months. I'd pick it up now. I pick up a lot of things right now.
Yeah, I was going to say earlier in the podcast, I think this is a good time to keep accumulating your favorite names. Buy some of the dips in your holders that you're going to hodl over the next 5 years, your cores. I'm continuing to allocate money on these dips. So don't get too aggressive. Keep remembering, get ready to buy more. Always, we're going to buy in waves. We're going to buy in waves. So don't all in. But this is a good time to just enter into the waves.
So, anything else on technology?
Not really, man.
Do you know what I like? I feel like there's more IPOs in the technology sphere than any other IPO. I might be wrong, but I like technology IPOs coming in. I think it's good for emerging markets.
A lot of them coming out is a sign of health, I would say. It's a sign of a healthy market if there's lots of tech IPOs coming out. I think that's a good sign. I think that's a healthy sign of an economy, of a good economy.
Well, I don't know. Bitcoin Cash, get the fuck out. Right. I don't got much else to say.
I mean, I can't really badmouth it. I'm not a huge fan. I don't hold any technology, to be honest. Oh, that's a lie. That's a lie. I have Nokia. But that's more of like a telecom. They're like telecom services and shit like that. But I'm not a huge fan. But I like I said, I am fan of Apple and Microsoft. And right there, your top two holdings. And then you kind of just get to the rest of the exposure. It is a little bit more volatile than the overall market. It's one of the more volatile sectors. In a sell-off, this is the first thing to go.
Yeah. Just so much of it, though. That's why.
Yeah.
So many people are holding it.
The hodlers. But yeah, like I said, I can't really badmouth it. Now, before, if we had done this a year ago, I just might say that it's too risky, it's too volatile. I don't like the overpricing valuations of Facebook and Google. And Amazon was never in this one. I keep saying it, but it's just so used to saying that. But Netflix was in there. Twitter. Blech, just get them out of there.
Get them out.
Get them out. Get them out.
Fucking up the ETF.
So, you wanna tell us what you're watching? I feel like I was gonna say something. I had something important to say, and I was gonna save it for like towards the end, but completely forgot what it was.
I guess, yeah. I guess you already know. KO, Coca-Cola. I was watching them earlier in the summer. Summertime stock to watch, you know? Enjoy a nice Coke.
When you're enjoying a nice Coke on a barbecue or having a Jack and Coke on a nice hot 4th of July.
Yeah, so I'm going to do an Iron Condor on her for the end of the week.
So you're looking for a little time decay?
Yep.
In your favor, a little lack of volatility?
3%. Yeah, it would have to move 3% in between my sells, my shorts. So I'm hoping less than a 3% move. Either direction. Coca-Cola.
Interesting.
Let it be known that RTG is long Coca-Cola.
Long on the KO?
Yeah, we are. Right?
That's very true.
Yeah.
I'm gonna watch the Dow overall.
Okay.
Overall, to be honest, I want to see her get lower.
Whew, Jesus Christ.
It's unpatriotic, un-American. I mean, I just see downtrends, dude. If I just had money to play with, I'd be shorting it. Like, if you just look at every chart, it's just a downtrend, son. And it's just ugly.
Looks like it's got support, baby.
I don't see too much. Where are you seeing support on the month? On the 3 month? 3 month and the year?
Year.
I don't know. I could see a slow breakdown, but if it's going to hold, I'm going to say it's 238.
That's the support right around here. Triple bottom, 1, 2, 3.
23.8. If it's going to hold, it's going to be 23.8.
23.8. I could see 23.8.
Sell the 23.8 put right now. I'm doing it. Let's see what I can get for that. Say end of week 238 put. Where you at?
Where you at?
Sell it.
Where you at?
And we're gonna buy the 237. $17 on 50. 34%. Whew. Whew.
What are you doing? The end of the week?
That was end of week.
For the 23.80?
Should I do it?
I got $1.90 on there. Are you looking at the calls?
No, I was selling the puts.
The 2380 put.
The 238 put.
Yeah,
on
sorry.
Dia. 238 by the 237.50.
Nah.
What's wrong? Tell me what you don't like.
I don't know. What's the collateral? $50?
Dude, it's a $16 max loss.
Let's do it. I'll do it with you.
No, it's a lie. It's a $34. It's a $17 max.
The premium into the
34%.
Yeah. All right, let's go.
You about it?
Yeah, let's go. Let's do it. Oops. Yeah, we don't want that.
Do we have an out? Or are we just riding the expiration?
You know me, baby. Are you doing it? Are we doing it?
Yeah, I gotta put in $50.
All right, let's end this episode and let's do it.
All right, I'm doing it. Dia.
Have a good day, everybody. Bye.
Later, bro.
Shut up and sit down.